Hello everybody, welcome to the channel. So in this video, we're going to talk about finding the origin of the move. So specifically related to my two-step model. So if you haven't seen it before, and this is the first video, this is my two-step model. It's 5 steps, and the first two are the main bulk of the model, right? You find range one, which is your A to B leg. Find range two, which is your B to C leg. And then step three, four, and five is think of it more like trade management. So over the months, years, I've been thinking of, okay, how do I find better quality two steps? Because once you understand the process, then the question is everything looks like a two step, right? Well, the problem is everything looks like a two step. So how do I find the actual best quality two steps? And this is the challenge. So as a hobby, I decided to build an indicator that would, well, two things. One, find the origin of the two step, and two, then tell me where the best level is, right, for the entry. Now, typically that entry level, if you look at the steps, is at point C. Okay. So this is between your 50 and your 75th. I thought it'd be an easy challenge. It wasn't. Now, to cut the long story short, what ended up happening was what I was building didn't work. The scope just didn't fit. I was really struggling because I'm doing it myself. It's not outsourced or anything. And I'm learning a lot of things. But the recipe I put in started to do something very, very strange. So it wasn't finding my two steps. It wasn't finding the origin of the two step. The reason I'm laughing is because it started doing something that was just weird, but very powerful. What it started to do, I'll show you this in a line chart. So I've put it on a line chart. Now, I don't know if you can see this. On the right, I have silver. So by the way, I'm still testing this indicator. I call the indicator IB, which stands for initiation block. On the left, I have gold. Now, this is the lower time frame. I'm testing it on the lower time frame, but with live data. So I've done testing with um, legacy data. Ignore the dashboard on the right. That's just for me to test. Just data, it just makes it quicker. And these gray boxes, as you can see, are the IBs. The IB is the equilibrium point. That's what the software was doing. That's what the indicator was doing. It was finding these levels, these invisible levels on the chart where price had reached equilibrium. So if you think about equilibrium, it's like fair value. And if you know where fair value is, then it becomes easier to answer the question, should I buy here or should I sell here? Because then you know, is price expensive or is it cheap? Because you understand what the fair value is, right? I thought, no, no way. So I kept testing this. At the moment, it's gold and Q so far, just those two. And this thing is just driving me insane. It's driving me insane. Because if you think about the use case, all the use cases for this, okay, this can keep you in trades. If you say you entered a trade based on some logic you had, every time you see the auction, it tells you who won the battle. Did the buyers win the battle or did the sellers win the battle? Because every time you have an auction or the equilibrium or the fair value, right, above that fair value would be sellers. So there's always sellers in every level of the chart. Below that fair value, or in my case, the IB, is aggressive buyers. So now you're watching for the mechanics of price. What is price doing? Because that tells you what the smart money is doing. Who wins the battle? So think about another use case. If you are already in a trade and you want to know where do I get out, well, the IB tells you because it tells you who won the battle, right? If you're thinking about getting into a trade, so you've done your analysis, you said, well, this is the level. You then see an IB at that level. Guess what? The IB tells you who won the battle. All right. Price does two things at these levels. One is it protracts. So it's very similar to like a churn or a plateauing, or ICT people may call it seek and destroy. So it will protract. I just call it protracting. Right? It's trying to find a winner. Right? It's trying to find a winner here, buyers or sellers. And it'll do that around the IB, which are these boxes. Now I put it on a line chart because it's just cleaner and easier to see. I want to see the closing prices. I don't want to see the actual range spread at the minute. Okay, because I want to see who's winning this battle, who wants to win this battle. Now I have my own ways of mechanics, price mechanics, to determine who's winning, and it's just based on strength or weakness. So right now, this is live. This is live. For me, this level is very interesting. Okay, that's just my own analysis. Okay, nobody else's. So what am I watching? So this is the 5 minutes, by the way. You can watch this on any time frame, and again, very different from time frame to time frame. You will have IB clustering on lower time frames. You see a lot of IBs um, being created. So just think of it as just one big massive IB because it's the lower time frame. So what I'm watching is when price is going above the IBs, is there weakness, right? So is there weakness? Are there things like no demands and uh, sellers overcoming buyers? Like, is that weakness? Can I see weakness there? Now, for other people, they may be looking for something more structural. Like, again, I'm not an expert, but let's say ICT, students or people that use ICT might be looking for breakers, or they might be looking for displacement, OTEs, stuff like that at these levels. Um, and then smart money concept traders might be looking for rejection of demand zones, right? For example. So these are the price mechanics. So the ways you determine who's winning this battle. But here's the thing with these different concepts is they still don't know where that invisible line is, right? This indicator is doing it live. So it's not repainting, it's not looking at legacy, it's live. As price moves, it tells you where the battle line is. Where is the battle line? Where is fair value, right? Where is the calm before the storm happens? This thing is crazy. So what I'm going to do is just stay on this for a little bit. I'm going to pause the video so it's not too long, and then we'll see, because basically we have a battle going on, and you can see price is protracting between these two IBs. Again, this is the 5 minutes. There's going to be potentially a winner, or it will just keep protracting. The problem with protraction is it's not limited by time. So it can be very short or it can be very long. For example, silver protracted for over 2 years, right? Over 2 years. So protraction is not time limited, but we are on a 5 minutes, so I expect some level of resolution. So let's pause and come back. All right, guys, what I've done is on the left, I've just made the gold chart, a line chart, just because it's just easier to actually see. So um, if I follow my two-step process, all right, what I'm trying to identify is just step one. Okay, so the, I am at a level where it's caught my interest. So there's certain things I check. I've got videos that go through everything. And when it meets the conditions, then I start to tick off my list. So I'm looking for step one, which is to find range one, a direction. What I'm expecting to see is a direction from this high to some low. Now, time is against us, so we'll see if it can happen before market close. That's the idea. If it doesn't, then I'll try and do a part two to this, right? So continuation to this, just to keep the video as short as possible. On the right, we've got silver, and you can see we're still gyrating in and around the IB. So, so my experiment is on the right and my two-step is on the left. Okay, so just bear in mind my original plan or design for the indicator was to find high quality two steps. Right? That was the original idea. What it's done now, it's finding equilibrium. That's what it's doing. It's finding these levels on your chart that has multiple use cases. They're just multiple use cases. All right. So, and well, I guess an ICT way of thinking about it, I'm not an ICT expert, is anything above your equilibrium, anything above the IB is basically your premium. Anything below the IB is basically your discount, right? So um, I'm just watching price mechanics at the moment, so how price is behaving around the IBs because the price mechanics tells me it's the easiest way to tell me what is smart money trying to do. Now, if I ignore the IB for now and I just look at the left, right? I'm just using my normal two-step model. Okay, I'm just using the normal checks I have to say, okay, this point is interesting. Now I want to do X, right? Now I want to do Y. So point A in my two-step model is the anchor, right? It's the anchor, right? On the NQ, I call it, I usually use time because I trade within a specific micro session. So I'll use the 930 open as my anchor. However, with gold, because I'm not bound by sessions or days or even weeks, it's more swing positional type trading. I'm referring to it as the anchor, right? So once you find that point, that is point A, I sit and wait. All right. So let's give it a couple of minutes, then we'll decide if the video ends here. All right, guys, it's about 3:50 p.m. Nothing's really happening. So let's summarize the whole thing. On the left is gold. This is the 5 minutes, by the way. And what I was trying to show you in this video is how I try to find the origin or the anchor of the two-step model. So that's the model that I use. So that's point A. What I decided to do was build an indicator to basically help me do this because the two-step is good two steps, which is what you want, and there are bad two steps. So bad two steps are basically inducements. Okay, so they are complex two steps, and like anything, they either work or they fail. So the whole idea of what I'm doing on the right hand side of the chart was to find something that can find the higher quality two-step setups. However, like I said, that turned into something very different. So on the right hand side, ignore the dashboard. By the way, that's just testing data. What I ended up with is a tool or indicator that basically finds equilibrium. And once you know where equilibrium is, so you can think of this like your fair value, you start to understand the context of price, right? Is price cheap or expensive? And then you look out for price mechanics. So price mechanics is what is price doing in and around these levels, right? Because that then shows you the footprints of smart money. Are they are they aggressive buyers taking over or are they aggressive sellers taking over? Whichever way you want to view how price is moving. So on the right hand side is very interesting. Lots of use cases, still testing. And on the left is just my traditional two-step model. Now I haven't found anything today, but I do want to say that you always bear in mind you always want to be aware of the context of the higher time frame. So whatever you're doing on the lower time frames is congruent with what is happening on the higher time frame, whether that's with the trend or again or counter trend. But you're just aware of what's happening on the higher time frame. Thank you for watching this video. Hopefully you got some insights, and if you liked it, please like the video. Um, Also subscribe because the algos love subscribe. I'll see you in the next video.